Hello everyone, this is Silent. I want to welcome you to a new series that we're going to start where I will begin doing a market review of the NASDAQ or any other markets that may be of interest. So we want to jump right into the NASDAQ weekly chart, September contract 2025. I have this large down close candle here marked with a fib. We ran above it twice. Past 2 weeks we ran up into that high and couldn't get a candle to close through the 845 level. We draw back down into mean threshold 310. Couldn't quite get a close down to that range. So what I'm working with going into next week would be the mean threshold of this candle. If we can start closing down below that 310 level, my drawn liquidity is going to be this buy side imbalance here. The only thing that would stave off any bearishness, in my opinion, would be respect of this 310 level right on the open of Sunday and begin trading higher, and we would target 845 and this high here. Dropping down into the daily chart, we have this up close candle, bearish order block. We traded above the weekly down close range here. You can see it marked, same fib. We traded above and displaced lower back into the 310 mean threshold on the daily basis. Ran small sell side here under the bodies of these down and up close candle here, and traded right back up into the daily sell side imbalance I have marked in this purple shaded box. We began consolidating here a couple days. I was paying attention to the wick of this up close candle because if we closed here right on the constant encroachment level of the sell side imbalance and kind of just consolidated here, I was looking for it to start selling off either on this day or this day, but we failed to see that, and by the end of the week we ran up into mean threshold up into 774. So it would be good to keep track of this in the future, watching the wick like this after we lay a body over a SIBI. If it begins consolidating and we have an order block near it, kind of expect that order block to be traded to before any sell off after that. Let's drop down into the 4-hour chart. Same levels brought down from the weekly and the daily. We spent some time in the low of the daily sell side imbalance, ran up and closed above constant encroachment. Spent a little bit of time in here on this down close candles range, ran up one more time finally and tagged that daily mean threshold, broke down. Now we're right back on top of this down close candle again. I'm suspecting it will become a breaker block. I don't want to refer to anything in this price action because I would prefer if this 4-hour sell side imbalance fair value gap here would not be traded into. I'm wanting it to be kind of a breakaway gap. I want us to, on the open, if we're extremely bearish and looking for lower, I want to see the open on Sunday kind of respect the range of this down close candle, potential breaker here. And depending on the kind of price action we have here, I'll either extend it or leave it as is, because in reality I'm looking at both of these down close candles here because it creates the order block, but we already respected it on the way up for one final push up into the mean threshold on the daily. So on the way down, I want to see us kind of respect the lower half and show bearishness through this candle here. Going into the hourly chart, not really much to add here. It's just kind of a weekly kind of range here. We opened on Sunday, dropped down, rallied up, spent some time in here, rallied up. It continuously drew up into the constant encroachment of that daily SIBI, so it's already kind of telling us warnings that we'll potentially try and draw up into that daily order block constant encroachment. But each day in here, I was trading intraday, shorting after it was reaching above constant encroachment and into the daily order block here. This day we could have had a nice sell-off, but it was just too early for the weekly to play out. It seems like they're gonna hold it and then play something for the next week. So we failed to close significantly below this low and trade back up. So it's just hallmarks of, one more push up and kind of idea to complete a 3-drive pattern on the 4-hour chart. 15-minute time frame. I want to break down this sell model a little bit. We have Thursday and Friday's trading here. Asia range on Thursday dropped down into this imbalance, rallied up after midnight into the daily order block, and broke above Wednesday's high on Thursday, and then spent some time here into the close. I was paying attention to this imbalance from Thursday. I want to see, do we begin breaking down after hitting that main threshold of the daily order block? And the only imbalance that hadn't gotten traded to before the midnight open for Friday was this imbalance. So we consolidated after midnight on Friday, broke down through it. The next fair value gap that we would be looking at would be this, because we would prefer that this gap not be traded to, because we trade up and right back down with displacement. So we spend some time, rally up right on the 8:30 open and begin selling off, and then finally after New York open we slide down into Wednesday's low. So we take out Wednesday high on the buy side of the curve in Thursday, and then by the time Friday rolls around, we're breaking through back into Wednesday's range with displacement. So we'll begin attacking Wednesday's low. And this could be extra credit if you're interested to look at sell side imbalances from Wednesday. 1 minute chart here. Right on the open, we failed to reach that SIBI from the 15-minute chart at 9:30, and we're just waiting for the first fair value gap to show up. This is my model here. Opening range imbalance. Trades up into it, breaks down, trades up into this imbalance. Institutional order flow entry drill here. We want to see this gap stay open. It breaks down again. A nice sell here as well with this imbalance. Breaks down one more time, finally attacking Wednesday's low. And it happened so early in the day that they kind of spend some time just consolidating. I was interested in watching if it would break down from this range, but by the time we got to the end of lunch, I had to change gears a little bit and just recognize that maybe the weekly range is gonna be put in, and we'll just have the close near the low kind of idea on Friday. So after noon opens, we trade above this high market structure break. We have inversion fair value gap here, PM session first presented fair value gap here, and we rally right up into this imbalance, clean it up, and then just spend time wasting the day away here. Nothing really more of interest until we get to market on close. We run the buy stops that smart money traders would have bought from the imbalance here and just paired it up with this buy side liquidity, and then sank it lower right back into the first presented fair value gap of the PM session on the close there. Alright, so that's going to be it for today. Hopefully you learned something insightful, and I'll be excited to hear some feedback. Hopefully you enjoyed I'll see you guys next time. See ya.